You're an American expat living overseas and you have no idea what forms you have to file. In this video, your US expat starter pack. Every form that needs to be on your radar so you don't miss a filing, you don't miss a deadline, and you don't get hit with unnecessary penalties while you're enjoying your international lifestyle. Let's get started. Hello, my name is Javier Correa. I'm a duly licensed and enrolled agent admitted to practice before the IRS, and I'm also the tax director here at the Rothbard Group. Let's take off and let's go right away. Number one is FBAR, FinCEN Form 114. This form is required by all U.S. persons who have bank accounts or financial accounts abroad. So think brokerage accounts, bank accounts, any kind of financial account that you may have in non-U.S. financial institutions, and whose collective balance across all of those accounts go over $10,000 at any point during the year. So I want to clarify, it's the collective balance across all of those accounts. Let's say you have a bank account in Panama with $5,000 and you have an account in Singapore with $4,000, and then you have an account in, let's say, Switzerland with $2,000 and so forth. You see, none of them go over $10,000, but if at some point the collective balance of all those accounts in all those foreign countries go over $10,000 at any point during the year, then you have to file the FBAR, which is again FinCEN Form 114. So very important. A lot of American expats confuse this with the FATCA form, which we'll talk about a little later in the video, and ultimately trigger unnecessary penalties. Do keep in mind that FBAR can also be triggered when you have signatory authority over an account. So maybe you don't have the accounts personally, but a company that you own does have a foreign bank account, and maybe under certain circumstances that can also trigger an FBAR requirement. So just keep that in mind. Then the second form is Form 8938. This is the FATCA form. So this overlaps a lot with the FBAR. However, it is meant to go to two different beneficiaries. So the FBAR goes to the U.S. Treasury Department, whereas Form 8938 goes to the IRS. They essentially target very similar things, but at different thresholds, and they provide information to two different parts of the U.S. government, if you will. So if you're single and you live abroad, if at any point during the year your account balances across foreign bank accounts hits $300,000, or if at the end of the year you're at $200,000, then you have to file Form 8938. If you're married, filing jointly, so let's say you're with your spouse and you're going on this international journey along with your spouse, the thresholds are doubled. So that's year-end $400,000, or at any time during the year $600,000, right? So you do get a bit of a break here. You get obviously more if you are married, filing joint. And this is actually quite positive because compared to U.S. citizens that are in the U.S., the thresholds are much higher. So if you're in the United States, the thresholds are much lower. If you're single, living in the United States at year end with foreign bank accounts whose collective balance is $50,000 or more, then essentially you trigger the form, $75,000 at any time during the year. And if you're married, filing joint in the United States, that's $100,000 at year end, or $150,000 at any time during the year. So essentially by living abroad, you do get a much higher threshold when it comes to Form 8938 FATCA form. So very important to take that into consideration. Now, Form 5471, this is also a very big one. So Form 5471 comes into play if you interact with foreign corporations, which obviously many American expats do. So if you are a shareholder of a foreign corporation, if you're an officer, director of a foreign corporation, if at any point you have some kind of control directly over a foreign corporation, if you are the shareholder of a corporation that is considered a CFC, a controlled foreign corporation during the tax year, at any point you have to file Form 5471. Now, do take into consideration that Form 5471 is divided into 5 separate categories. Make sure that you understand all the 5 categories, each of the 5 categories, and to see if you potentially fit into one of those categories, because you may have to file one category and not the other, but definitely a very important form to keep in mind. Penalties associated with it are quite high if you miss it. Then, Forms 3520 and 3520-A. These forms are very important if you're interacting with foreign trusts. So essentially, if you are receiving distributions from foreign trusts, if you're making contributions to foreign trusts, if you in any way or form interact with foreign trusts, then these forms are going to be very important. For example, we here at the Rothbard Group, essentially we create a lot of foreign trusts for Americans or for mixed families that have both U.S. persons and non-U.S. persons. We create Panama private interest foundations, for example, that are in most cases taxed as trusts in the United States. And these forms, 3520 and 3520A, do do come largely into play. And again, very important. You do not want to miss them. Now, let's take a look at some other forms that are very important. Form 2555, that one is going to be the starter point for most of you. That's the foreign earned income exclusion form. That's the form that will allow you to claim the FEIE, which I believe is essential for any American citizen living an international lifestyle. That's $132,900 for 2026. You're going to want to claim that if you qualify. In addition to that, you also have to keep in mind Form 8621. That's the PFIC form. So we have other videos talking about PFICs. PFICs are very complex. So PFIC and controlled foreign corporation are kind of like the two provisions that really govern how Americans interact with foreign corporations. And if your entity qualifies as a PFIC by meeting one of two tests, then you automatically have to file this form. Keep it in mind, very important, especially if you're investing overseas. Again, very, very important. Form 8992, this one is for NCTI, net CFC tested income, formerly known as GILTI. This one is very, very important. If you are a shareholder, a U.S. shareholder of a controlled foreign corporation, you have a lot of complex calculations to do with this one. This is essentially the income that is attributable to you from the foreign corporation. If some of you are doing international business through foreign partnerships, then Form 8865 is also one that you are going to want to keep into consideration. Now, all of these are forms that are essentially exclusive to American citizens that are working and living overseas, American citizens that are doing business abroad, that are doing business internationally. Therefore, it is highly unlikely that your domestic CPA or enrolled agent tax preparer has even heard of these forms, let alone prepared these forms. But you do have to keep them in mind, because I see a lot of American citizens that move abroad, many of them here in the Republic of Panama, and ultimately they come to us after the damage has been done. Their local CPA just did not file these forms, and that leads to penalties, that leads to missed tax planning opportunities, and we can't have that. If you're going to be international, you might as well take advantage of all the international tax provisions that can favor you as an American citizen living abroad. And unfortunately, that does come with filing a couple of extra forms every year. But if you work with the right company, with the right professionals, the forms can be handled. What was a headache turns into a lovely journey where we end up seeing how much taxes you're saving at the end of the year, and your international lifestyle is enhanced by these forms instead of being dragged down by them. So if you want to work with the right professional that understands all of these forms, that understands international cross-border taxation, look no further. We're here for you, rothbardgroup.com. And I'll see you in the next one.